Hello, and welcome to Learning Outcome 1. Understand the concept of assurance. What does assurance mean in the world of finance and auditing? This video delves into the essence of assurance, exploring its principles and processes. Discover how assurance impacts stakeholders and the importance of internal controls. Assurance is an engagement where a practitioner expresses a conclusion. This conclusion boosts confidence in the evaluated information. It aims to reduce the risk of incorrect data influencing decisions. Assurance involves offering an opinion on specific information. This helps users make informed decisions confidently. An assurance engagement involves 5 key elements. First, the 3 parties: practitioner, intended users, and responsible party. Second, the subject matter under scrutiny. Third, suitable criteria to judge reliability. Fourth, sufficient evidence to support an opinion. Lastly, a written report in an appropriate form. Consider someone buying a house. Most buyers lack the expertise to assess structural conditions. They hire a surveyor to perform a structural assessment. The surveyor's report helps buyers make informed decisions. This reduces the risk of purchasing an unsafe property. Assurance reports serve both internal and external users. Internally, they guide management decisions. Externally, they build confidence among investors and stakeholders. These reports conclude whether objectives are met. They differentiate from non-assurance engagements. Reasonable assurance offers a high level of confidence. It involves gathering sufficient evidence to draw conclusions. The practitioner concludes conformity with suitable criteria. A positively worded opinion is issued. This type of assurance is thorough and reliable. Limited assurance provides a lower level of confidence. It involves gathering evidence to draw limited conclusions. The subject matter is deemed plausible. A negatively worded opinion is given. This type of assurance is less extensive than reasonable assurance. The assurance process involves several steps. Engagement acquisition is the first step. Next is risk assessment and engagement acceptance. Scope and planning follow, leading to evidence sourcing. Finally, conclusions are drawn and a report is prepared. Stakeholders include shareholders, management, and auditors. Shareholders seek assurance for informed decisions. Management prepares the subject matter. Auditors review and report on this information. Each stakeholder plays a crucial role in the assurance process. Internal stakeholders include the board and executive management. They need assurance on risk management and performance. Key performance indicators are used to measure success. Concise and high-level information is preferred. Internal stakeholders focus on strategic and operational insights. External stakeholders include auditors and regulators. They seek confirmation of risk management and compliance. Assurance reports provide insights into organizational practices. External auditors rely on professional teams for information. Regulators focus on compliance and potential issues. Assurance engagements aim to gather evidence for conclusions. They ensure compliance with legislation and standards. Engagements can provide reasonable or limited assurance. The goal is to express a conclusion on compliance. This helps stakeholders make informed decisions. Review engagements offer limited assurance. They involve procedures like analytical review and inquiry. The goal is to identify any issues in financial statements. Review engagements follow international standards on review engagements. They are less extensive than statutory audits. Statutory audits provide reasonable assurance. They follow legislative requirements like the Companies Act. Auditors gather evidence to form an opinion on financial statements. The goal is to ensure statements are free from material misstatement. Statutory audits are thorough and detailed. The expectations gap refers to misconceptions about audits. Some believe audits provide absolute assurance. Auditors only offer reasonable assurance, not a guarantee. They test samples, not all transactions. Understanding this gap helps manage expectations. Professional skepticism is crucial in auditing. It involves a questioning mindset and critical assessment. Auditors must be alert to potential misstatements. This attitude enhances audit quality and reliability. It is essential for identifying risks and responding appropriately. Auditors apply skepticism throughout the audit process. They assess engagement, acceptance, and risk. Evidence is critically evaluated for reliability. Auditors remain alert to contradictory evidence. This approach reduces detection risk and improves audit outcomes. Skepticism is vital in detecting fraud. Auditors consider the potential for management override. They evaluate the reliability of audit evidence. Management responses are corroborated with other information. This ensures a thorough assessment of fraud risks. Skepticism applies to accounting estimates and going concern. Auditors assess management's assumptions and judgments. Related party transactions require careful evaluation. Compliance with laws and regulations is closely monitored. Skepticism enhances the auditor's ability to identify issues. The financial crisis highlighted the need for skepticism. Auditors faced criticism for insufficient skepticism. It is crucial for assessing fair values and related transactions. Skepticism ensures audits are thorough and reliable. It is a cornerstone of audit quality. In conclusion, understanding the concept of assurance is important for ensuring reliability, transparency, and trust in organizational processes and reporting. Assurance involves the independent evaluation of information, systems, or activities to confirm that they meet required standards and expectations. It helps organizations identify risks, maintain accountability, and improve the quality of their operations. By implementing effective assurance practices, organizations can strengthen governance and support informed decision-making. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 074-843-61688.